Now, I have the pleasure of introducing our next BVC brief, The Board Game, Assembling the Pieces to Complete the Best Team. Betsey Nelson is an experienced public company CFO, board member, and investor with a passion for helping entrepreneurs scale their operations and build great companies. She currently serves on the boards of 3 public companies, Berkeley Lights, Nokia, and Upwork, as well as several private companies. She has experience on the boards of leading SaaS companies like Autodesk, SuccessFactors, and Zendesk, as well as digital media pioneers Pandora Media, Ancestry, and CNET. Betsey spent 10 years as CFO of Macro Media, where she was responsible for leading the finance, IT, and ops teams. She earned her MBA in finance from the Wharton School and her BS magna cum laude from Georgetown University. Welcome to the stage, Betsey. Great to see you. Joining Betsey today is the Dyrt team. The Dyrt is the largest online camping community and top-ranked camping app with over 1 million campground reviews, photos, and tips, helping campers make the most of their camping adventures. Co-founder of The Dyrt is Sarah Smith, who is an active member of the Oregon startup community. She developed her love of camping while growing up in northern Minnesota. Before founding The Dyrt, Sarah had a long career in international higher education, living, working, and sometimes camping in Japan, England, and India. She has a master's degree in intercultural management from the School for International Training in Vermont. Kevin Long is the co-founder of The Dyrt and a 2-time exited entrepreneur as co-founder of Just Means, a sustainable news distribution platform, and as VP of marketing at CrowdCompass, an event management mobile app software company. Prior to that, Kevin was the founder of Global Deaf Education, which created self-sustaining deaf education systems in developing countries. Kevin's work with CDG won him the Ashoka Fellowship and Reinhard Mohn Bertelsmann Fellowship. Something tells me these 3 have some collective knowledge to share, so take note, and I'll let you take it away. Oh, I think he's... Oh, that's okay. Hold just 1 second, Betsey. Yeah, she's bringing it to you. Yeah.
Me now? Kevin, Sarah?
Hey, Betsey.
All right. Hi, good to see you.
You too.
So we're going to do this a bit as a panel. Me live here and the founder and CEO of The Dyrt online, a company I recently invested in, I'm very happy to say. So I think we're going to start off with some introductions. Is that right?
That sounds great.
That sounds great.
Okay,
Take
so...
it away, Betsey.
All right. I'm here, so I'll just start quickly to give you a sense. I mean, yes, she read a bit of the bio stuff. I thought it might be helpful for a group that is about a third entrepreneurs and then a third institutional investors and a third service providers to get a sense of what a board does. And I'll just give you quickly, I've worked on what I would call 3 kinds of boards. One is early stage private companies. And there the role of a board can be different than a later stage, but I've got experience with a few of them, and those aren't on my bio, but I'm also a board member of a company called Smule in the music space, which is an app and a community for music. Noodle AI, an AI software company, and DAI, a private international development firm. And then there's growth stage companies, and the board of a growth stage company has a little bit of a different role. It's more about helping the company to put jet fuel, I would say, behind the mission and help them with the mission of executing and scaling a company. I'm on the board of Upwork, which I put in that category. And as well, many of these companies I do help take public. So Zendesk was an example of that, or Berkeley Lights, SuccessFactors, a whole bunch. Help them through that journey. And then the third kind of board that I've been on are more what I would call a turnaround or special situation, where a company is restructuring and looking for independent board members to help guide them in that journey. I'm on the board of Nokia, which you may have said, oh, wow. It's a really different kind of company, but it's been quite a fascinating journey from a restructuring perspective, or a major business pivot. So that's it for me. Sarah?
Awesome. Thanks, Betsey. So I'm Sarah. Sarah Smith, the co-founder of The Dyrt, which was founded back in 2013. My experience with the board thus far has been only with the Dyrt board. So, pretty early stage. And, what we've experienced so far is, Kevin and I founded the Dyrt back in 2013. Um, didn't have our first board member until 2016. And that mainly came about because we started raising money. And then one of our investors came on as a board member. And since then, it was just the three of us for quite a while, and that's really all we needed at that time, being early. And now we have 6 people on our board, which feels just right for the stage that we are at here at the Dyrt. And Kevin, I didn't mean to hog all the introduction. Go ahead.
I think you nailed it perfectly. We went from being a project to, the Dyrt has, now gone through a few rounds of funding. We're a 30-person company, and we're now in that growth stage. It kind of went from being a project to being a fast-moving startup with a little bit more pace behind it. That's kind of where we're coming from on this panel with our perspective from the Dyrt. Hey, Betsy, just doing a quick sound check. Can you hear us okay?
Can hear you just fine.
Okay.
And I've got you on the big screen and on a little screen, so I can see the cues.
That's exciting. Screen madness. I love it. I wonder if we should just kind of jump into some questions here that we talked about a little bit before this panel. And, we've all heard about different board of directors. I'd love, maybe people would be interested to hear what you look at. What does a board do? And I know you have a lot of different scenarios with different boards, but maybe if we could start there, what do you think about that?
Sure. And it is a common question, by the way. So first of all, a board of directors is different from an advisory board. The board of directors is the governing body for a company. So when you incorporate your startup, you'll have bylaws or something that say the board of directors is responsible for the following decisions. So it really is a legal governing board. In the early stages, as Sarah said, your board might be just one investor, or it might be, your father at the start or mother or something. It's a person you trust to help you with key decisions. Over time, I think that role evolves as a company gets more complex and as your needs as a founder or entrepreneur change. And you want to start bringing in people that aren't just saying, yes, you can spend this money, but are starting to be more advisors to you on how to build a company. So it's a governing body. Over time, it should help you and your management team in building the company, bring expertise you don't have. And in a sense, it's a free way of getting advice into a company. Not necessarily always free, but you need more voices around the table because we all have blind spots, right? And it might be, you might have a product expert like Sarah leading a company, might have less experience in customer acquisition. So you might bring somebody on your board with that kind of background, et cetera. So a board changes over time and has more oversight over time, brings more experience to the table in the early stages. Totally what you guys have done.
Sarah, what would you say of when our board has helped us? I know I have some thoughts on it, but I'm curious, what do you think about that?
Oh, this is something the three of us talked about earlier this week. I think the board helps you in different ways throughout the evolution of the company. So like initially when it was just you and me, Kevin, and then we brought on our first board member, the beauty of that experience was that all of a sudden there was some validity behind us as a company because an outsider was saying, hey, yeah, I want to jump on and be a part of this and steer it. So like that in the beginning stages, bringing validity. Of course, bringing investment is important. All our board members have helped us raise money. And now, things like having a comp committee and having board members who can help us with that and help guide us on things that we might not have the expertise in has been super helpful. So it's really changed over time, and I'm sure it will continue to evolve as we get even bigger.
Yeah, I remember when we were starting, we were even just trying to figure out the basic things of, so how are we looking at the difference between a board member and a board advisor? Betsy, I know we have our own personal experience thoughts from the Dyrt, but I'd be curious to kind of get your thoughts because you work on so many different types of boards that are at different stages of the companies. How would you explain the difference between board of directors and advisors?
So again, the board of directors is a governing body by law. So it is truly responsible for a set of decisions about the company. And that often is dissolution of the company, changing the CEO, mergers and acquisitions, that kind of thing. Advisory boards can be great. I've seen advisory boards work quite well for software companies where we set them up and they tend to be customer advisory boards. And so they give you validation from a key set of customers. And that's really nice to have sometimes. It's different from governing the company's affairs.
Mm-hmm.
To help.
One thing I throw out, Sarah and I were talking about this morning, and maybe slightly off of this question, but we have our board of directors, but I got advice early on from another entrepreneur that said, take 1% of your current cap table and break that into 10 different chunks and give those out as advisor spots when you're raising those first few rounds of funds for people who are willing to A, put money in, but then B, support you with a couple calls a year, whether that's helping you think through a strategy area, maybe something that you don't have a good skill at, or maybe help you with some more networking to continue to raise rounds. So that's how we looked at it on the Dyrt on the advisor side. Mm-hmm. And what's really interesting over time is you give out these shares, half of them are great and the advisors are really helpful. Half of them you think, that was just a waste, it didn't quite work out. The biggest learning lesson I've recently had is we've now had over 6 years of that, right? Of advisors that we handed out shares years ago. And what's interesting is these advisors over the years have come in at different periods of time and different life cycles of the Dyrt. Sometimes I thought, they're never going to be helpful. That was a waste. And all of a sudden, 6 months ago, huge support, huge networking support. And so we really appreciate both our board of directors and our advisors have really been great helping us get through those milestones.
I thought that was really creative what they did in this instance. It's a way of having, a group of folks who have a stake in you. And that stake, over time, contributes to their interest if you can engage them. And that goes to, you need to engage them too, right? So they need to know enough about your business and your issues so that they can contribute. So I think that was really, really well done, Kevin.
Yeah, thanks, Betsy. And one thing, speaking of engagement, you actually just made me think about this. We do an investor mentor update where every quarter we just do a really quick email. Here's the good, here's the bad, here's what's happening. And then our board and our advisors get a little bit more detail than kind of our general list. Talking about engaging, it doesn't necessarily mean you always have to have a meeting on the calendar with these people every quarter and talk to them. Part of engaging is just keeping them, up to speed on the evolution of the company so that 2 years later, when you really need them, they're there and they're already up to speed. So I think that's a big part of it, of having that engagement piece. We're talking about some fun things and some great networking support. How about we talk about failures? Betsy, you ever been on a board that was a failure or an instance of a board that was a failure?
Of course not. Yes, I think, the primary failure I see from a board perspective, and I've been on over 10 public and 20 or 30 private boards. The biggest failure I find is a failure to contribute and a failure to tell the truth that can really help an entrepreneur at times. And I will give you one example. Obviously, it won't be one of the public companies. But I would use an example of a company called Living Social, which some of you may remember that I was brought on to as an outside director at the time when Groupon was super hot and Living Social raised, this is mind-boggling, but close to $1 billion in funds. So these venture funds that had put in, it was $975 million, were like, this is awesome, it's a rocket ship, it's going someplace. And the truth is, the economic model was never clear. I mean, I kept saying, yeah, you're buying customers. You're really good at spending marketing money to acquire customers. What is the economic proposition at the end of the day? And it was super hard on the board, honestly, to get people to focus on that because they were so committed to it. So I learned a lot about the need to stand up and say, I'm out of here. I'm actually going to leave because you just don't see what I'm seeing. So that's an example of a failure, I would say.
Betsey, I got to get my hand on that Living Social pitch deck.
They were the top Silicon Valley firms putting in money, guys. So you can't just do these follow the smart money thing. That does not work.
Yeah. Sarah, I'm curious, you've been involved with startups and a lot of companies, and you do a lot of mentoring out there. I'm curious with the different, Betsey's definitely on a different level than we are with the boards and the size organizations, but from different startups that you've seen in Portland or Bend or Eugene, what sort of failures have you seen with different boards?
I think the thing that I've seen, with us kind of early stage companies is, and we haven't experienced this, but I've seen it in others, having a board who's made up of investors who may not have the best interest of the company in mind. They may be skewed a little bit towards making sure their investment is going well. I've seen that happen a few times, and I've heard other entrepreneurs talk about it, and obviously that's probably super common, but it's unfortunate, and I think that's probably the failure that I've seen or heard happen the most in the startup community.
Have you seen that too, Betsey? That is tricky when people are putting in their own money and everyone has different exit periods of time and different returns that they want. How do you see that play out often?
Yeah, I think it is a common issue, and it's not that investors are bad people. And by investors here, I think we really mean institutional investors or venture funds. It's just that they have a different, interest. Their interest is usually the life of their fund. And you get to the end, and they got an interest in pushing you out, and you may have an interest in continuing to build the company. That's the typical tension I've seen. And I think the best way I've seen to address that is right up front, to bring in independent board members earlier, and to bring in members that have operating experience in your industry or a geography you want to get into or strategic relationships. Bring other things to the table, and that really helps set up, first of all, a good discussion at the board about strategic options, but also you don't get steamrolled by one fund who was the earliest investor and still has 20%, and they say you should go public, and you say, I'm not ready. So, yeah, it is a common problem, Kevin. I think you're right.
Right. Betsey, Sarah and I were talking this morning of, what might be helpful. We were thinking back to 6 years ago or 5 years ago when we were starting our board, is just to talk about some really simple logistical things with boards. But just to check here, because I think you have a magical clock in front of you that we can't see. How are we doing on time?
We have 8 minutes and a half, I believe. They do tell us.
Well, let's jump into some of these. So when do you start a board?
So I'll give an answer, but I also, you guys have good experience, I think, too. When you're starting a company, all you got to do is establish your product and start to get a market working, right? You don't, in a sense, need a board. You also probably haven't even incorporated yet. When you incorporate is when you need legally to have that board of directors, according to your bylaws, right? But, it could have one other person on it if you want. It could be you and someone else. It's a journey in terms of how you evolve your board, just like Sarah said, right? You had one for a while, and then you added another, and it might have been the terms of, somebody's round of investment that they need a board seat. And that's why it usually is an investor-led board at the start, because that was a condition of their investment. Yeah. As a company gets through a B round and a C round and a D round, you have to, as an entrepreneur, manage that, because you don't want to end up with just an investor board. And again, investors are great, but you want more than that. So I'll give an example of one of my current boards I think has done it real well, and that's Smule. Ballpark $100 million in revenue now, by the way, and It's taken over 10 years to get there. And This is a theme I see as well, right? Everybody says they're an overnight wonder. It's like, no, there are no overnight wonders, or very few. It takes a long time to build a company. But this is Jeff Smith's fourth company. He took one public before. He sold one to Google. He sold one to IBM, I believe. So he knows. He's not a young entrepreneur. He's done this before. So very early on, I think, within a year or two of founding, he brought on his first independent board member. And it was a guy who was also a CEO founder of a company called Pluto TV. Similar kind of go-to-market model and all, but different space, video instead of music. Then he brought me on a while after, and then we brought on Ken Rudin, who was the head of growth analytics at Facebook and then at Google. Very little experience, right?
Yeah.
So we have a pretty darn good board that is, 3 independents who help him on different aspects of building a company, and 3 investors. And seeing he's mature, he's also pretty good at managing all the board observers, which sometimes you end up with too, as a function of, your term sheets, which personally, I think it's just a pain in the butt to have a bunch of board observers in a room. I think it complicates conversations and decision making, but I know sometimes you get saddled with them, and often your independents are the ones who can help deal with those and help say, they're great people, but we need to have a private session now, an exec session to make decisions. And that's a role that independents often play.
Right. How do you go about finding these board members, Sarah or Betsey?
Go ahead, Sarah.
Well, I think it's interesting. I think up until now for us, it's been a lot of investors, obviously. We do have one independent, which is a term I didn't actually know before we talked to Betsey, on our board, who works in the outdoor industry. And he was just a natural fit, someone we knew in the outdoor industry, who we knew could bring value, beyond money to our board. And just using our connections in the outdoor industry to find him. And I think, I'm really happy with where our board is now, and I'm not sure I have exactly the knowledge. Kevin, I think you're more involved in how they came to be.
I mean, I think
done
a
well.
lot of them is it comes, it comes with investment and serious investors who are leading rounds and, putting in big checks, oftentimes request they want to be on the board. So there's a little bit of a natural evolution with it, of the investors who are passionate, believe in the founders, believe in the vision. And you have to make a decision then. Do you want to take that money and give them that board spot? And it's a really important decision because it becomes the, guiding decision makers, a piece of it in your company. And then the other side of it is forming together those independent boards.
Kevin, like we talked about, I think as companies mature, they get a little more, mindful or purposeful about building a board. And it's something to think about, kind of the stage where you guys are, that growth stage, and you've done a great job bringing somebody in from the outdoor industry, like you said. In mature companies, and even in public companies, we use what's called like a board skills matrix. It's a simple tool, but think about, what are the skills? What are the industry experiences or contacts or geographies or business models in which you want somebody to, give you some expertise? And start like laying it down over time. And then you can be thoughtful about pursuing, okay, if I'm looking for somebody who's built, I'll use a different example than you guys, an enterprise SaaS company before. They're out there. You write down your ideals, and you may not be able to get to them on the first call, but you can get to somebody who knows them usually. And often that's the benefit of angel investors is, like me, we've worked with a lot of them, and so we can help get you in touch with somebody. But I think it's really good to be planful as you go about building out over time the skills that you need around the table. Because just the same way you build out a management team, right, under you, I need a head of sales or I need a head of product or marketing, you can do the same thing on the board. It's really important to be planful about that.
Yeah.
Betsy, are you in a room full of people? Sarah and I've been locked away in our house during this weird COVID time for so long. Are you in a room full of people there?
It's really not the Tower Theater of usual days,
Yep.
but we do have 50 or so people in the room, very socially distant and very appropriately
Okay.
masked. And then there's also a big group apparently over at McMenamin's.
Got it. Okay. Right up at the bar, I bet.
And,
Okay.
and
Well,
then we've got supposedly, I think, 400 people online, is what Brian said. So
okay.
it's,
Great. Well,
it's definitely COVID time.
Yeah.
that's great. Maybe any questions from the audience? I have a couple more questions if we have time, but maybe you just thought I'd check and see if you have any questions in your audience there.
Hi, Kevin. Hi, Sarah. It's Shannon. Hi, Betsy. Thank you so much for this conversation. I recently joined my first board. It's in the nonprofit sector, but it's hard work. It really is, and I just appreciate your insights so much. So again, we're taking questions from the audience virtually and in person via menti.com. So if you have any questions at all, you'll head to menti.com, enter the code, and it looks like we actually have one. Can you each describe the qualities of your favorite board member you've ever worked with? This is a great question. I love that. Your favorite board member you've ever worked with. What were their qualities?
I will go first on that one. So
Now, Sarah, everybody, so you know, we are married co-founders, and Sarah and I are both on the board for the Dyrt. So I'm very curious what Sarah's going to say here.
Well, I can't say you, Kevin, or myself. So we have a board member who he has been phenomenal. He's been and everyone on our board brings something different to the table. But this board member in particular, it doesn't matter what time or when or what the question is. He is always there to answer our questions. He's been just a savior during the whole last few years that he's been on the board. Just really a wealth of information on different things we need to know about, and he's just always willing to help. So Betsy, you said it earlier, I think the biggest failure is someone who's like just not engaged, and super engaged and super helpful.
Yeah, I'd add to that. I mean, Sarah, you're talking about Greg Ennis from Peninsula Ventures.
Yes.
We have a really good board. Every single person on our board is active and supportive. Greg Ennis from Peninsula Ventures, I became a much better CEO over the last few years because of this mentoring I've gotten from Greg at every one of these little moments I need someone. So the ability to just text somebody, get on a phone really quick, get some quick advice. It's lonely being a founders, and be able to have that backup ready. That's a huge, huge thing to have that relationship.
That's great. I think you guys both nailed it. I will add just a couple qualities, if that's okay. One, I think a person needs to be humble. And we don't talk about that a lot, but you got to not have a big ego. You're there to serve the company. You're not there to run it. This is a board, not management. So you got to be humble. You got to be independent and willing to speak your mind in a constructive way. And to do so with what I call soft hands. And that may mean that much of the value is in those phone calls, like Kevin said, or in the side meetings, or you go have coffee or a drink once in a while. It's not necessarily in a board meeting. So humble, independent, have courage, and then be available and be accessible, correct. Because you do this because you're really trying to help the mission. And you got to be accessible to the founders, the management, however and whenever they need the input.
I love that, Betsy. Yeah, like kind of getting the ego out of it.
Yeah.
Me too. I appreciate that. Well, Betsy, you're like the ultimate board member. You have so much experience. And I find that my observation is many boards sort of learn by doing and sometimes learn by failing. And I know that's very common, but it can be really painful. And I'm wondering, how did you learn how to be such a great contributor to our board? And the question
By
for
failing.
all three of you.
I think we all learn that way, right? You don't go to a school and come out a born CEO or founder or board member. It just doesn't happen. And yes, I have an MBA and all that. But no, I learned a lot, frankly, about a good board from the board of the company where I was the CFO for 10 years. I learned from some luminaries in Silicon Valley about how to be a great board member and how not. One super luminary turned every board meeting into a product planning session. That is not what a board should be doing, okay? Others would want to dive too detailed in some areas, and so I did learn from being the executive on the receiving end, what I needed from my board. And what I needed was to be able to access them for input when I wanted it, in a secure environment, in a trusted conversation, and not necessarily in that full room. So that helped me learn. And then I've probably gotten better over the years. I've been doing this for 15 years now. And I would say it's partly what's the relationship with the team, and being able to, have some emotional intelligence, frankly, about what do they need and where can you add value.
Yeah.
Just
I love that.
blowing me away.
Sorry.
Betsey, really well done. And anything to add, Sarah and Kevin?
I just one more question for Betsey. How do you get rid of a board member if you have to? Have you ever
Great
ran
question,
into that?
great
We've
question.
never ran into that ourselves, but I'm curious if you have.
Yes, I have, several times. And this is another area where soft hands really come into play. And I'll give you a scenario. A company that I was brought on the board as the first independent investor, or independent director. I put in a little money, but I was a small investor, and it was several large Silicon Valley investors. And the company was very successful. It's called Success Factors. You may be familiar with it. It was one of the first HCM, or human capital management, SaaS companies. And we had a founder who was increasingly clashing with the lead investor, who had been in for 10 years and was just very frustrating to him. He kept, trying to micromanage the CEO. We now have a public company CEO who shouldn't be having to go to ask for any hiring decision or any investment decision to this board member, as they had maybe 10 years earlier. And so the CEO asked me, would you be willing to chair my Nom and Gov committee and help me make a change in the board composition? That would be the formal way to say it. And so, yes, I got to do that. And it's a difficult conversation, but it's one you need to have sometimes. Learning from that, what I would say is, for any young company, and for any mature company as well, set expectations on what you're looking for from a director. Set them up front, and then annually evaluate their performance. Because you know what? They work for the shareholders. So it is absolutely fair, and in fact, public companies now, and both NASDAQ and New York Stock Exchange, are mandated to do annual board self-evaluations. You don't have to have a third party come in. You can do it yourself. But it's a conversation that the management and board need to have together about, are we being effective, and where should we be adding skills? I'm a firm believer in a board should always be refreshing itself, so that it's not, the first guys there are going to be there for the next 30 years and they're smoking their own exhaust. Because that happens. We're all human, right? We fall in love with our own ideas, and you need new ideas periodically to come in to help the company.
Seems like the U.S. government could take a page from your book, Betsey. I just wanted to insert that into the conversation. I know you spoke about it just a little bit, inviting new members in, finding new members, welcoming investors, of course, is one way, but what's a good way to really put it out there? This is what we're looking for. Like, can you just elaborate a little more on the process of finding a perfect fit?
Do you want me to go? Do you want that?
All three.
Different perspectives, and I think it's really helpful to have, the founder CEO perspective and a board member's perspective. I get contacted a lot by people in the venture community that I've worked with over the years, and I think most of my boards have come that way. Occasionally it'll come from somebody I know in the tech world, and I get a lot of calls from headhunters. I will say, actually, I think I've joined one board out of 30 that came from a headhunter. So it's usually not that way. For the companies, though, how do you find them? It's your network. So go ahead, you guys.
What would you say, Sarah? I mean, I feel like our board has really naturally come through pitching a lot of fundraising, like a little piece at a time. Back in the day, putting together, $2 million rounds on $50,000 and $25,000 checks, a lot of scrambling. And then I feel like the network gets bigger, and then you start to understand who are these investors who could do more than just bring a check. And it's about really like finding that skill set. And Betsey, exactly what you were talking about before, just like a management team, think about that with your board. And don't just put everybody on it because they're putting money in. I don't know, what do you think about that, Sarah?
Yeah, no, I totally agree with that. Yeah, I think you hit it on the head.
Yeah.
You know, to your last point, Kevin, especially don't put anybody on just because they wrote a check. That's really important, because it's a lot easier to take somebody off your team management than it is to get somebody off your board, right? And I think of it from the board perspective also. I mean, I get a million calls for boards. I have to be very selective because I view them almost as a roach motel. Like, when you want to go, you can't. Because when you want to go is when the company's in trouble, and honestly, that's when you really need to stick around and stand up for the common shareholders. And I use as a proxy for the common shareholders, it's the employees. It's, you know, customers and employees is who you serve when you're a young company, right? And over time, yes, it's public and all, but it's very important selecting board members. Take time. Take your time to spend time with the person. Go out to dinner a few times. Have some tough conversations.
Look at
Yep,
their
I
Facebook
agree.
page. I'm just kidding about that last one. So this is, Kevin and Sarah, you may have something to add, but I know, Betsey, you certainly have some insights. How do you know when to call it? Like, is there coming back from, becoming dysfunctional? Is there a certain sort of jumping the shark point? Or is there like, this board is not functioning and we're going to do this, this, and this and give it another try? Or have you noticed any sort of commonalities in those experiences when the board kind of takes a left turn?
I'm not sure. Yeah, I think it's a bit like, was it Dostoevsky? Like, a lot of families are dysfunctional. They're dysfunctional in different ways or whatever. And I think that's true of boards. So I don't know that there's a common pattern. I think I've seen some boards get in trouble by getting too big. And that's one thing you see a lot with, with nonprofits, actually. Large philanthropies and stuff. You end up with a 20, 30-person board. The truth is, they can't govern, because they can't even get in the room at the same time. Forget about COVID. I think a board needs to be small enough to have intimacy and be able to establish a working relationship. And they need to be engaged. So they can fail as well by not being engaged. And I have seen that a few times, where they just, you can't get them to even focus on the questions that really matter to you as the CEO or the founder. And again, is it fatal? No, not necessarily, but it's suboptimal. So I guess I'd look at that, the failure to engage, and then the size of board. Just keep it as small as you can to get the job done. How about you guys?
Yeah, Betsy, I'm curious from your perspective, what is too big for a board? We're at 6, which feels good for where we are right now. I'm wondering how big boards get.
Yeah.
EDCO has 47 right now.
What's that?
EDCO has 47 right now, so they can get quite large.
But those are different kinds of boards, right? EDCO's a public institution, and those are advisors, I assume, or I don't know, so I won't even answer that one. I think for a board of directors of a company, I think a number, 8 to 10 is, I would say, large and enough. 6 to 8 is great, as small as you can. As you get public and you have more obligations, you have more needs to staff committees and stuff, so you need more people around the table. But seriously, the ones where there have been major failures in governance have been very large. If you want to go back to like the WorldComs and what was Enrons and so on. And they end up putting figureheads on boards because they look good in a prospectus, and they don't spend the time to govern the company. So
Not as functional.
there's a peril there.
Yeah.
That's great to know.
Yeah, so less is more, I guess we can say. All right, well, if there's any other words of wisdom you want to leave us with, this has just been so helpful, and so I'm sure everyone agrees, so in our service. So thank you for all of the wisdom shared here. But any just closing thoughts from any of you?
I'll give one closing thought. Looking for those original board members, aside from people putting major financial contributions in, so you get more people really committed into the boat. One thing to think about when you're looking for potential board members, especially if it's an outside strategic non-investor board member, like Betsy's saying, go out to dinner, go out to coffee. It sounds kind of like, oh yeah, sure, of course I would do that. But no, really do that. And when you leave that meeting, your mind should be like, wow, that person just made me think about all these things I haven't thought about, and the value is incredible compared to like, oh, that was a nice coffee, I sort of like them. You have to really be like, wow, like Betsey, when me and Sarah were prepping for this panel, as soon as we got off the phone with you, we were like, man, it would be insane to have Betsey on the board with us, right? Like that's the feeling you need to have when you have coffee or dinner with somebody. It can't just be like, oh, they were nice.
Yeah.
What he said. That was a perfect ending.
I agree. I feel like he also gave me some dating advice. Well, the three of you, Kevin, Sarah, and Betsey, I really appreciate you. Thank you so much for joining us.